Okay, everybody. Well, it's Thursday night. It's about 11 o'clock Eastern Standard Time, and you can see the pound actually managed to push down for most of the last couple of sessions. When we were talking about it last, the pound had made this high here, and it started to come down back into this trading lane or this flag pattern. Let's go up to the 4-hour bar here. And one of the things that we've got to watch out for is how the market is going to react inside of this zone. Remember last night I was talking about how you could look at the market making a zone here and really up to the top here. There's some sub areas, as I call them. You can really run a line all the way across here and see some other correlations. And I hadn't really thought about it consciously, but this line was what was really giving me some trouble, if you will. I was seeing that this line would pose some resistance to the market, and you can really see that the price has been swinging back and forth across this particular line for the last several weeks here. It managed to push above, comes back down, pushes above, down, back above. Now I haven't done this yet, but what occurred to me was to actually come in here and measure one of these swings. We'll just see. Yeah, okay. So we'll see how this line, if I can grab it. What I'm going to do here is measure the overall move. I don't know if you can see this, but this move that I'm measuring is 155 pips. So what I'm going to do is take this line and clone it and put it across the rest of these moves to see what we get. Let me get this last one. What I'm trying to do is place the... There we go. Okay, so this is an illustration of the symmetry that I was talking about before. And of course, all you engineer types out there are going to want, an exact number. But remember, we're dealing with people. And people are an inexact science, if you will. We can get a range of values. We can know about what somebody is going to do, but it's very difficult to predict with precision what any one person is going to do from one moment to the next, let alone trying to project it out over a mass of people in an emotionally charged environment like the financial markets. So you can see here, we've got one move up that was 156 pips. The market pushes back down, comes up, almost 156 pips again, comes down. Now here you can see, let me place a line on here. Now you can see that this move down here was just a little bit more than 156, and this move back up was a little bit more than 156. But look at what happens. The market comes right back down, and again it's very close to 156. So you can see that the market is starting, at least, to develop some symmetry. The next move, well, what I would suspect is going to end somewhere in this vicinity here before moving up. Now, does that mean it has to? No, it doesn't. But if, let's pose this if-then scenario. If the market is going to continue moving up, where is it likely to stop based on this prior pattern? Well, you know what? It's probably going to stop after it's moved down 156 pips, which is right in this area here. Okay? So, what does this mean? Again, this is going to be a trade you're going to have to monitor, but I think this is a good area to watch for the market to start to turn back around. Watch for 3-bar reversals in this area. I would not use the 240-minute bar doing that. I was just using the 240-minute bar to make it easy to see. You can see here, had I tried to do that symmetry exercise, there's just a whole lot of noise here. The 240-minute bar is much clearer. Could you use a 1-hour bar to do a 3-bar reversal? You can, but you're also running into a little bit of an issue of you're needing to give up quite a bit in the market. Let's go ahead and review what a 3-bar reversal is quickly. A 3-bar reversal would be waiting for this hourly bar to close and then counting back 1, 2, 3 bars. This high now would be the price at which I would look to take a long position. As the individual hourly bars close, I continue to add, wait for the bar to close, and then count back. So once the next bar closes, I would count back 1, 2, 3, placed the high now quite a bit lower. Remember, what you're doing with the 3-bar reversal is capitalizing on the loss of momentum in the market and then a shift of momentum in the other direction. Also, one thing to keep in mind here would be to watch out for a failure. So if the market does manage to push up, a good area to go short would be somewhere in here. Why do I say that? Because if you look at the overall pattern of the market, you can see that support has not really held until you start getting down into the 270, 265, 270 area. So again, these are trades you're going to have to monitor. Remember, don't try and put the market into a box. We're at a time where the market is volatile. I just give you an illustration where the market was swinging back and forth over a pivot point, if you will, or a fulcrum point, and just like a pendulum swinging back and forth, once you snap that line, that ball is going to shoot off, and you're going to have a good momentum move off of it. So let's keep our powder dry. Let's wait for the market to gain some momentum and give us the signs that it's getting ready to make a move. I think using a 3-bar reversal in this area, the 320 area, is going to be a low-risk bet for the market to come back up just based on the pattern which is presented.